Eddie Ghabour with us now, our market watcher on this Wednesday morning. Okay, right, we've got a lot of green on the left-hand side of the screen. Dow up, S&P up, Nasdaq up. Eddie, when do you think the Fed will actually cut rates?
I think the soonest they'll cut rates is summertime, just because I think the last mile to get inflation down to 2% is going to be difficult. I am concerned as to why the bond market, because I do think the bond market signals, I respect them. I think they're smarter than the stock market. I am concerned as to why the bond market is pricing it in sooner. The Fed's made it clear that they want to make sure we don't get a reacceleration in inflation. That would be their worst nightmare. So I see by summertime, unless we have a big downdraft economically that forces their hand to cut sooner than the summer.
Will you be buying stocks again by the end of the first quarter of next year? I read your stuff and you're implying that. Is that what you're telling your clients? Buy at the end of the first quarter?
Absolutely, Stuart. We have a client event tomorrow that will be showing that. And we had a meeting with our fixed income team yesterday. We're seeing yields at 6 to 10% right now. We think they're going to be higher by March. And there's a lot of equities in this concentrated market. The benefit is there's still a tremendous amount of equities that are 30, 40% from their highs of 2 years ago when we got out. And you're starting to see these yields at 7% plus. And even in the energy space, I mean, right now, energy is in a bear market. There will be a time to jump in some of these great names that have great cash flow, pay a good dividend yield, and then small caps. If we truly are going to start to reaccelerate economically in the back half of next year, small caps will lead. So we're licking our chops, but we're continuing to be patient for those opportunities that are here.
I have to put it to you again. Your clients have missed a very big rally. The indicators are at all-time highs, or some of them are, and your guys are out. They've missed it, haven't they?
Stuart, look, when we look at the math, right? So let's use a company like Tesla, okay? We sold Tesla for a client that had a lot of Tesla at near 400. So everyone's boasting about 100% return on a year-to-date basis, but you still lost 40% of your money. Timing matters. Small caps are still down over 20% from when we sold. So if we sold, at the end of last year, it'd be a different story. The bulls this year, all they've done is made up from the losses of last year, and they might be close to even.
Right.
So right now, they may have finally caught up to us after 2 years, but our path of volatility has been much lower, and next year will be the tiebreaker on whose risk management strategy was more sound for their clients.
All right, Eddie Ghabour, we'll see you again soon, and we'll see if what you're saying comes out next year. You got it.